Let's talk about the stock of Equity Group Holdings. Is Equity Bank stock a good stock for you to invest in? You'll really understand that by the end of this video. Let's start by looking at Equity Bank share performance, okay? The current share price of Equity Bank stock is 89 shillings and 25 cents. Of course, looking at the gain across the different times, 1 day gain was 2%, 5 days gain was 5%, and then over the past 1 month is gained by 3.2%. And most important, when you look at year to date, simply put, how much is gained in the 2026 alone? Equity Bank stock has gained 34.2%, and over the past 1 year, the stock has gained 72.5%. That tells you the stock of Equity Bank has performed pretty well at the NSE, in fact, gaining more than the average market return. Then, when you look at profits, profit after tax has been growing. And I'm saying so because over the past 3 years, the trend has been on the upward trend. 2023, profit after tax was 43.7 billion Kenya shillings. 2024, profit after tax was 48.8 billion Kenya shillings. And 2025, profit after tax was a record 75.5 billion Kenya shillings, making Equity Bank the most profitable financial institution in East and Central Africa. And financial year 2025 profit did increase by 55%. You're going to understand why it increased like that in this video. And of course, when you look at EPS, earnings per share has also been increasing consistently, because 2023 EPS was 11 shillings and 12 cents. 2024 EPS was 12 shillings and 34 cents. And 2025 EPS was 19 shillings and 7 cents. Therefore, Equity Group is currently up 72.5% in 1 year on its share price, right? And of course, profit-wise, it increased by 55% in financial year 2025. The key question is, after this massive rally, is Equity still worth buying at 89 shillings and 25 cents its current share price, or has the market already factored in all these amazing developments in this share price and it won't continue increasing? Let's talk about all that in this video extensively. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Please consider subscribing to this channel. Don't just watch this amazing video without subscribing. And I'll still add it, drop a like on this video. And by the way, some of you have reached out to me about the possibility of me providing investment advice to you specifically. Reach out to me. My number is down there, my WhatsApp number. Reach out to me on WhatsApp. Let's have a brief conversation. I understand your investment journey, and be sure I'm going to be able to support you when it comes to you making informed decisions around investing in Kenyan stocks. So reach out. Having said that, let's now look at the company snapshot. Simply put, how is the snapshot or profile of Equity Bank looking like? So, Equity Bank Group Holdings is, of course, listed at the NSE, right? But then again, we appreciate Equity Bank Kenya is its largest subsidiary. But of course, within the Equity Group Holdings, we have different banks or even different businesses, right? And Equity Group did evolve from a Kenyan bank into a regional financial services group. Remember, I said it's the most profitable financial group in East and Central Africa. Its core businesses include banking, insurance, digital finance services, investment, and financial services. And of course, it has operations in Kenya, Uganda, Tanzania, Rwanda, DRC Congo, South Sudan, just to mention a few countries. And it has approximately 22.4 million customer accounts. Regional subsidiaries contribute to 48% of the group's net profit. That is important because it tells us Equity Bank has successfully diversified from the Kenyan market. Of course, Kenya is still its most profitable market, but then again, locking in 48% of group's net profit from other markets is amazing, because DRC, for example, gave Equity Bank 24.7 billion Kenya shillings in net profit last year, accounting for upwards of 30% of its profit. Rwanda did give Equity Bank 5.4 billion in its net profit, Uganda 3.6 billion, and Tanzania 2.7 billion, right? Equity's 2030 strategy is to target to reach 15 countries and 100 million customers, which is very ambitious, but the group is on to something amazing. So, in case you decide to buy the stock of Equity Bank Kenya Limited, what exactly are you going to be getting onto? Simply put, what is Equity Group's investment thesis? Number one is earnings growth. And I'm saying so because profit after tax increased from 43.7 billion Kenya shillings in 2023 to 75.5 billion Kenya shillings in 2025. That is a commendable jump because in just financial 2025, the profits increased by 55%. EPS also increased from 11.12 in 2023 to 19.07 Kenya shillings in 2025. And beyond that, the second thing we're going to be jumping onto is regional diversification. Approximately half of the group's profitability now comes from regional subsidiaries. That is an amazing progress, and DRC has become a major earning contributor, contributing upwards of 30% to Equity Bank's earnings, okay? And then the third thing you're going to be getting onto is improving efficiency. And I'm saying so because cost to income ratio, in 2023, it was 52.3%. It did deteriorate in 2024 because it increased to 58.2%, but then again, it reduced substantially in 2025 to 51.0%. That tells you there is improving efficiency because the bank is incurring less costs to be able to generate revenue. And then looking at dividends, dividends have been increasing over the past 3 years. I'm saying so because 2023 dividends were 4 shillings per share. 2025 dividends were 4 shillings and 25 cents per share. 2025 dividends were 5 shillings and 75 cents per share. 2025 alone, dividends did increase by 35.3%. That tells you dividends is on the upwards trajectory. And then the other thing which you're going to be getting onto is digital transformation. And I'm saying so because more than 98% of customer transactions were conducted outside the branches of Equity Bank, and 88.4% of transactions were processed through digital channels in 2025. That tells you Equity Bank is very big on digital transformation and digital banking. Having said that, let's delve a bit deeper on the financials for you to really appreciate how the financial health of Equity Group looks like. Starting with growth, okay? When you look at profitability, simply put, profit after tax has really grown over the past 3 years because 2023 profit after tax was 43.7 billion. 2024, it was 48.8 billion. And then 2025, it did jump by upwards of 55% to 75.5 billion Kenya shillings. That tells you profit after tax is on a consistent upward trend. And then looking at the EPS, as I've mentioned, EPS also has increased consistently. 2023 EPS was 11 shillings and 12 cents. 2024 EPS was 12 shillings and 34 cents. And then 2025 EPS was 19 shillings and 7 cents. That also tells you EPS is consistently on the upward trajectory. Then when you look at total assets of Equity Bank have also increased substantially for it to be one of the banks with the largest asset base in the region. Looking at the 2023 numbers, right? Asset base was 1.82 trillion Kenya shillings. 2024 asset base was 1.81 trillion Kenya shillings. And then 2025 total assets jumped to 1.97 trillion Kenya shillings. Guys, that's very massive because to put it to context, Equity Bank's total asset value is almost 50% of Kenya's annual budget. That is how massive total assets of Equity Bank are. And then when you look at customer deposits, because also deposits and loans are key matrices in the banking sector, customer deposits have increased consistently over the past 3 years. 2023 customer deposits were 1.36 trillion Kenya shillings. 2024 customer deposits were 1.40 trillion Kenya shillings. And then 2025, customer deposits were 1.46 trillion Kenya shillings. And then looking at the net loans of Equity Bank or Equity Group have also been amazing. 2024 net loans were 819.2 billion Kenya shillings. And then 2025 net loans were 882.5 billion Kenya shillings. Then looking at net income of Equity Bank has also been doing amazing numbers, right? And I'm saying so because the net income of Equity Bank, right, in the year 2024 was 108.7 billion Kenya shillings. And then the year 2025, net interest income was 126.9 billion Kenya shillings, growing by approximately 17%. And then looking at the non-interest income in 2024 was 85.1 billion Kenya shillings. And then 2025 net interest income was 90.8 billion Kenya shillings, a growth of approximately 7%. Then looking at the total income of the bank is also doing amazingly well, because total income in 2024 was 193.8 billion Kenya shillings. And then 2025, it was 217.7 billion Kenya shillings, a growth of 12%. So as you can see, across the different aspects of growth, the bank is doing pretty well because it's registered growth across all the different aspects I've spoken about. Now, let's look at the financial health quality, because quality is a very important thing when it comes to banking sector. When you look at return on equity, of course, the average return on equity, Equity Bank is doing well because its ROE has increased consistently over the past 3 years. 2023 ROE was 22.3%. 2024 ROE was 21.5%. And then 2025 ROE ramped up to 26.7%. That, guys, is exceptional because it means Equity Bank is utilizing shareholders' investments to be able to generate more and more income. And then looking at return on assets, the return on assets for Equity Bank have also been increasing over the past 3 years because the ROA 2023 was 2.7%. ROA 2024 was 2.8%. ROA 2025 was 4.2%, which is also exceptional. Then looking at net interest margin has also been increasing because 2023 net interest margin was 7.4%. 2024 it was 7.8%, and 2025 it was 8.5%. Guys, this is exceptional for the banking sector because typically those best performing banks are normally somewhere between 2% to 4%. And then looking at cost to income ratio, this is where Equity Bank has fluctuated a bit because 2023 cost to income ratio was 52.3%. 2024 it was 58.2%, and then 2025 it was 51.0%. Yes, over the past 2 years, cost to income ratio has decreased because by all means a bank should aim to utilize the least possible amount of money to be able to generate income for the bank or revenue for the bank. And therefore, this cost to income ratio being at 51% tells us that Equity Bank has room to improve and hopefully is going to improve further. Therefore, looking at all these, the bank is looking quite amazing, and more so utilizing this and also looking at the asset quality. When you look at the group NPL ratio, simply put, the non-performing loans, 2024 non-performing loans were 12.2%, okay? And then 2025 NPL dropped to 10.5%. That is a commendable drop, but then again we hope Equity Bank's NPL is going to continue coming down further and further. And then looking at the NPL cover of 2024 was 71%, and the NPL cover of 2025 was 68%. Then looking at the Equity Bank Kenya specifically, NPL ratio beyond the group, the NPL ratio for Equity Bank Kenya was 16.3%. Guys, on that, I hope Equity Bank can improve, because having an performing loans ratio of 16.3% is quite a thing, because in the banking sector, the most ideal is under 3%. So hopefully Equity Bank is going to be able to improve on this, specifically for the Kenyan bank, and then see its NPL ratio reduce in Kenya. Having spoken about financials and you understood the financial health, let's now look at dividends analysis. How is Equity Bank performing when it comes to dividends? As mentioned, the dividends of Equity Bank have been amazing, because over the past 3 years, dividends have increased consistently. 2023 dividends were 4 shillings per share. 2024 dividends were 4 shillings and 25 cents per share. 2025 dividends were 5 shillings and 75 cents per share. That tells you dividend growth for the most recent year has been 35.3%, which is amazing. And of course, at the current share price of 89 shillings and 25 cents, we can even estimate its dividend yield being upwards of 6%, right? That tells you the dividend yield on Equity Bank stock is amazing. And also looking at the payout, the bank managed a dividend payout ratio of 30.2%, meaning it utilizes approximately 30% of its earning to be able to share with shareholders. But then again, we also understand why it is retaining 70%, because Equity Bank is also expanding in the region with establishing new businesses, for example, in markets like DRC, on the insurance segment, you name it. Then when you look at valuation, the bank's PE ratio or price to earnings ratio is 4.7 times. That looks a bit low, because ideally the PE ratio should be upwards of 10 times. And then the PB ratio of the bank is approximately 1.1 times. That tells us that in the market, investors are paying a slight premium, which of course is reasonable. It's just within the range of 1 on the stock of Equity Bank. And then its dividend yield is 6.4%, right? So when you look at it, the question isn't if the stock really is cheap, because I think the stock is valued appropriately in the market. Of course, the PE ratio could improve, right? But then again, also when we look at it, does Equity Bank deserve better premium valuation, okay? And is the current share price already pricing the future earnings growth of Equity Bank, okay? And even the most recent 72% 1 year rally, has it reduced the margin of safety on this stock? Or even so, is there still room for the stock to continue performing well and investors being safe? For us to also put that in context, let's look at the risks, okay? The number one risk for Equity Bank is credit risk. And I'm saying so because Equity Bank Kenya NPL ratio, as I've mentioned, was 16.3% in 2025. That is extremely high. So we hope the bank is going to be able to bring down its credit risk. Secondly, is the valuation risk. Share price has already increased by 72% over the past 1 year. Yes, the company is strong when it comes to its earnings, but still, it can be a poor investment in case there is excessive valuation, given already we've seen a 72% jump on its stock over the past 1 year. The third risk for the bank is competition. Let's face it, in the banking sector in Kenya, competition is extremely high. We have very many tier 1 banks doing well, KCB, Co Bank, NCBA, Stanbic, and you name it. So competition is a real thing, okay? And then the fourth risk of this particular bank is execution risk. Simply put, the bank is ambitious, right? Remember, its goal is to reach 100 million customers by 2030, right? So will it continue executing successfully around digital transformation, around continued regional expansion, insurance expansion, and even achieving its ambitious 2030 targets? All this is bound to really come to be in the test of time, but hopefully they're going to be able to execute successfully. And then let's now look at the growth catalysts. What is bound to work to the advantage of the bank, okay? Number one is regional banking. As we've seen, the regional subsidiaries are actually contributing to almost half of the bank's profit. Therefore, regional banking could grow and continue propelling this particular company and stock. And of high interest is the DRC market, which of course, the DRC as a country is a country which is larger than Kenya. We are talking about DRC having population upwards of 116 million people. Therefore, it is an interesting market for Equity Bank to continue gaining traction in, given it's been in the DRC for over 10 years, and so far, Equity Bank or Equity Group has gained 26% market share in DRC. And of course, also continuous growth in other regional markets like Rwanda, Tanzania, Uganda is going to see the bank continue doing well. Then the second growth catalyst is digital banking. Of course, Equity Bank is at the frontier in the country when it comes to digital banking, because 98% of transactions were executed outside the bank, and then 88.4% were executed 100% through digital channels. That tells us its potential for digital banking is extremely high, and it can scale even further. Then the third growth catalyst is insurance, right? And I'm saying so because in 2025, insurance pre-tax profit increased by 36% to 2 billion, which is also amazing. And then the fourth catalyst is SMEs growth. We all appreciate Equity Bank supports SMEs, SME lending, payments, insurance, trade finance, forex, you name it. So also, this is going to be a growth catalyst for Equity Bank around the SME space. And then the fifth growth catalyst is African expansion, based on its ambitious strategy of hitting 100 million customers and reaching 15 African countries. And of course, the sixth catalyst is profitability. We've all seen continued improvement across all the different areas of profitability, like for example, return on equity, return on assets, NIM, cost to income, and so forth. So hopefully, Equity Group can continue sustaining these for it to continue performing very well. Okay? Having spoken about all these, and you also having understood, what is my final verdict? Guys, my final verdict is that as a person who champions long-term investing, I'd continue buying and accumulating the stock of Equity Bank, because I believe this stock is a good buy. It has very strong business, strong earnings growth, improving profitability, attractive dividends, reasonable valuation, strong regional growth opportunity, significant digital banking. But then again, of course, we also appreciate we won't chase the same return annually. But then again, over a longer investment horizon, Equity Bank is poised to continue doing very well. What will you do? Will you buy the stock of Equity Bank? Or even so, what would be your investing approach? Comment down below. Let's continue discussing. Cheers, guys, and you all stay safe.